What's up, studs and studettes? Kunal here, Bulls on Wall Street. Guys, the market's been wild the last few weeks, and the action in gold has been really steadily dripping down. And I wanted to go over today a technique that I use at the market open every single day for literally the last decade plus. And it's called an opening range breakdown. For those of you guys in my boot camp class, you guys totally know about this pattern. We spend days perfecting it because it is a simple but powerful technique that you can use at the market open. And the best part is it shows up every single day. So a big part of the opening range breakdown, which is a shorting pattern, is understanding the nature of gaps and then how they add to the continuation of a play. So, every single morning we're running, scans for gaps. You can see here we have up gappers and down gappers, and I'm running these literally every single morning to see like what's moving around pre-market. That's very, very important. So, if we talk about a trade, guys, what's in a trade? When you think about what a trade is just a recipe in a cookbook. You need a specific list of ingredients to get the trade going, and then it has to go in a specific sequence to actually be successful at it. So an opening range breakdown requires, well, number one, you've got to run a scan for gaps. Now, I use Trade Ideas. That's a paid service. There's tons of free websites out there. Market Chameleon, Stock Market Watch. If you Google, there's probably a couple more out there. So you can, use some free resources also. So you want to be scanning for gaps, 3% or more pre-market. Now, for many of you guys, I come on YouTube Live, also in the pre-market a few days a week, going over these gappers. So make sure to subscribe and hit the notification button, because I'll be live, heck, tomorrow to go over these so I can start training you guys into this. And this is important because we're in earnings season right now, and these type of plays are going to show up literally every single day. So we want to get good at them. So I'm scanning for gaps, 3% or more pre-market. I want to filter by volume. So I need minimum 50,000 shares in volume in the pre-market. But if it's an ETF, I may go 25K, okay? Now, third part is, and this is very, very important, the gap, whether it's up or down, it has to be in the direction of its overall trend. So you can see the overall trend on JNUG. You have lower high, lower high, lower high, lower high, right? And it's like kind of breaking down a lot of support. So I have a downtrend on at least a short and intermediate terms, which is what I trade as a day trader. So I have a downtrend, and so I want to be, of course, if it's a down gap, I want it within a downtrend, right? So clean daily chart, gap aligns with trend. Good. So those are the ingredients that you need in a particular trade. Now, once you have the ingredients, you have to do the execution. That's always the hard part in trading, isn't it? Because you may know what to do, but sometimes, right, your fingers just cannot do what you're supposed to do in the brain. And that's prevalent in all aspects of life, right? Sometimes we just do stuff that we know we're not supposed to do, and it happens anyways. That's the same thing with trading. You have to train your brain to just have that kind of discipline to do it. A big part of even having discipline, though, is if you use very simple techniques where you know the ingredients, then you know the rules, and then you know how to shake and bake them all together. It's going to take a little bit of the thinking out. So now once the stock opens, what you need is a minimum of 3 sideways candles minimum at the opening range. So you can see how this stock gaps down, and then you got 1 candle, 2 candles, the 3rd candle, 4, 5, 6, and on the 7th candle, it breaks down. So what do you want to do here? As soon as it breaks down, this is how opening range breakdown works. So as soon as it breaks down, you want to hit it. So I shorted this thing. So this is in our chat room. I shorted this thing 57.60 is a typo. 57.60, stop at 58.25. So I'm risking 60 cents essentially. Okay, I covered half at 56.80, half at 55.90, and that, the other half ride while I was trading around with it back and forth. So 57.60. So as this thing is piercing down, I want to take a short on this because I'm breaking that opening range. So you need minimum 3 sideways candles at the open. Short on break of range. Easy enough, right? Now, the key on this type of trade is to remember that it's an opening range play. Opening range play. Meaning that you're only going to be holding it for the open. What is defined as the open? 9:30 to 10:30 for me. Okay, so this is a quick trade. You're going to be holding this thing for 15 minutes, 30 minutes, an hour. And then once the midday hits, you're going to re-hit it into different setups. So as this thing starts to shred down, I usually, and this is just a rule of thumb, if I'm up, like if I risk 50 cents, I'm up $1 on a trade, I'm going to take some off the table. And then basically every dollar, I'm going to keep taking a quarter off till I get where I'm supposed to go. So, we took a really, really nice shred into this thing right at the open. And then, you know what? Once that happens, the opening range breakdown is over. Now, a lot of times you may think like, I want to keep shorting it all the way down. That's not the way the market goes. Usually when you get a big shred like this, you'll retrace midday into like a VWAP area, then refade off. So like for us, I don't want to even mess with this thing as it's starting to retrace. So you just get out of the trade because it's open. Now, the big thing is later on, you can come in and like reshort it. So like end of day, I reshorted this thing, 55.20 down, with the stop at 55.75, and then we're playing it back to the downside. So what I usually will do is there's 3 stages to the trading day. You have your open, then you have your midday, which is usually a shorter on the VWAP, which I took, and then end of day is like breakdowns or breakouts within the concept of the trend. But the opening range breakdown is actually the most powerful because it's the fastest. The open is governed by volatility and price discovery, meaning at the open you get the big ranges, and then midday you get consolidation and retracement, and then end of day you choose a side. The big mistake that people make on this pattern is once the opening shred is over, they keep trying to like short it, but midday you're going to get a retracement or a consolidation. The juice and the flow starts to just dry up. The volume dries up, the liquidity, the volatility dries up, and then end of day you want to kind of wheel back into it. So remember, that's always the case. The open is hot, midday is not. The end of the day is a go, but sometimes it's a ho. So guys, hopefully that helps. This is a pattern we take in our chat room every single day. I'm on screen share, alerting guys to what I'm doing all day, every day. We got a great group of students in there. And guys, a lot of people don't know this, but with our chat room, you get a full educational system with it. You get an on-demand boot camp with 20 classes. We do 3 classes live a week called market recaps. I do a Sunday night market huddle. So not only are you getting a chat room, you're also getting a on-demand boot camp and a whole educational component with live classes every single week. You don't need to go out and spend like $5,000, $10,000 for some live mentorship. You can come in our chat room, make good trades, and literally have live teaching every single day during the trading hours while I'm teaching, but then also we're doing classes and huddles and study sessions and things like that. So guys, if you like this video, give me a thumbs up. If you have any questions, just hit me up. Hit me up. My email is kunal@bullson.ws, or just leave any comments. I love to hear from you guys. And if you have any suggestions on any videos, let me know. I'll make sure to take care of it for you guys. Take care.